Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. KG21 the secondary mortgage market. Notes print. Leave a comment. The secondary mortgage market. The secondary mortgage market is defined as a market created by government and private agencies for the purchase and sale of existing mortgages, which provides greater liquidity for mortgages. Fannie Mae, Freddie Mac, and Ginnie Mae are the principal operators in the secondary mortgage market. The Federal National Mortgage Association, FNMA, was created in 1938 to purchase FHA-insured loans. It was felt that lenders would be more willing to originate long-term loans if they didn't have to hold them in portfolio. Once lenders sold mortgages to FNMA, they could reinvest the funds by writing new mortgages. In 1948, FNMA began purchasing VA loans, and in 1970, they started purchasing conventional mortgages. In 1968, FNMA was split into two organizations. Fannie Mae, a federally chartered corporation owned by private shareholders. Government National Mortgage Association, Ginnie Mae, a government agency under the oversight of the Department of Housing and Urban Development, HUD. End of page. Chapter start. 29%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. KG22 the secondary mortgage market. Notes print. Leave a comment. The secondary mortgage market. Today, Fannie Mae purchases single-family and multifamily FHA, VA, and conventional mortgages. The mortgages purchased from originators may be held in portfolio, or may be securitized and sold to investors as mortgage-backed securities, MBS. It is important to note here that Fannie Mae, like Ginnie Mae and Freddie Mac, does not originate mortgage loans. They create a secondary market for mortgage loans made by others. Ginnie Mae is an important part of the secondary mortgage market, although they do not purchase mortgage loans or issue mortgage-backed securities. They guarantee the mortgage-backed securities, MBS, offerings of others. Ginnie Mae is backed by the full faith and credit of the federal government. If the borrowers fail to perform on a loan, the principal and interest will be paid by Ginnie Mae. End of page. Chapter start. 29%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. KG23 the secondary mortgage market. Notes print. Leave a comment. The secondary mortgage market. In 1970, Congress created the Federal Home Loan Mortgage Corporation, Freddie Mac, to provide a secondary market for conventional mortgages, primarily for savings and loan banks, which are also known as thrift institutions. Their initial funding came from the Federal Home Loan Bank, the central bank for thrifts. Historically, they have held little in portfolio. Most of the time they purchase mortgages, package them, and sell them to investors. End of page. Chapter start. 29%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. KG24 the secondary mortgage market. Notes print. Leave a comment. The secondary mortgage market. Over the the last 50 years or so, the secondary market has grown tremendously in importance and has revolutionized the mortgage lending process. Annual sales of mortgages to Fannie Mae, Freddie Mac, and Ginnie Mae rose from $69 billion in 1980 to over $700 billion by 2000. Even though Fannie and Freddie ran into well-publicized financial difficulties and were taken into federal conservatorship in 2008, they continue to operate, as they always have, purchasing mortgages and issuing mortgage-backed securities. Today, they own over half of the outstanding stock of residential mortgages in the United States. End of page. Chapter start. 29%.